Yeah, very good evening to all. I am Richard Rajkumar. I'm an aeronautical engineering graduate from Mohammed Sadak Engineering College, which is affiliated to Madurai Kamaraj University. I have an experience of 16 years, which includes 9 years experience in production planning and 7 years experience in quality control. Along with me, there are other friends. I like to introduce Mr. Praveen Kumar K. Please, Praveen.
Yeah, very good evening to you. And myself Praveen Kumar. I am a graduate from NIT Warangal. I have around 14 and a half years experience in public sector HCL towards the quality control. Thank you.
Over to Mr. Sanjay Shah.
Yeah, hello everyone. Very good evening. I am Sanjay. I am engineering graduate from NIT Patna. I have 17 plus years experience, supply chain and manufacturing.
Uh, Mr. Saurav sir, you can introduce yourself.
Production planning and
Good to see
operations.
you.
Okay, Saurabh, are you able to hear us?
The mic it seems.
Now
I'll
it's
just
okay.
now it's okay. I'll just come out. I'll just come out and log.
Okay, Rajkumar. I think Praveen can introduce about the book.
Yes, sir. So today we are going to discuss about the book Rich Dad and Poor Dad, written by Robert Kiyosaki. It is the book is very. I am very much connected to the book after reading it. It is my first book out of the three books which I read in the being part of the PM mentorship program. So the book is mainly about the financial literacy, how the educated engineers or educated people who do not have the financial literacy. It explains us the deep how we need to work on our financial positions to overcome or to come out of the rat races. So it's a very good book for learning purpose, and it's a very. I will recommend this book for the youngsters. I'm very little bit. No, I'm very because I'm 40 years old. I feel little bit half of my portion has been completed, but it would have been much better if I had the book some 5 years or 10 years before that. Yes, sir.
Hey, Rajkumar, you can take it.
Yeah, sir. Just I like to share with a small phrase. It's a saying like this: the ants do not have dream because it won't sleep. Similarly, the pigs do not bother about the sun and moon, racing of sun and moon, because it's never raise its head.
Okay.
Whereas the butterflies never celebrate birthday because it's live only 47 days. Whereas we human, the God has created in such a greater way, we should live with a greater world to maintain our wonderful wealth. We should have a financial literacy. 80% of the highly educated people lack in financial literacy because we feel that it's a boring subject because it was taught in a very word format instead of the numbering way. That's what the people feel is illiterate. So we struggle in the financial literacy. So one should come out of financial literacy. We should, the author says, we should know the terminology of this liability and asset, the basic difference of liability and assets. Again, he explains very clearly in this chapter, as Praveen said, rat race, then how it's a nightmare to become a wealthy person. Yes, sir. It goes on like that. Let us discuss.
Yeah, actually, what Rajkumar was covering basically, in simple words, if you want to say, it's basically financial literacy is the ability to use skills and knowledge to understand how money works, take effective money management decisions. It's not how much money you make, it's how much money you keep,
Yes,
and how many generations you keep it. That's what the case. So when we say here financial literacy is basically meaning on the not only having the money, basically you should have knowledge about how to keep it with you, how to retain it. Okay? So that's all. Like, see, there are many people are there who could be like overnight rich, could be like lotteries winner, people who are winning the won some lotteries, or you would have seen some celebrities. They have become overnight like a stardust. And when they become a star, they have so many money, and suddenly they don't know how to spend. When startup comes down, they are all gone. Similarly for the lottery also. Lottery also, when they have the money, once money is gone, they don't know how to keep it, and they lose it. So that's what the literacy comes in picture. That is not only the finance. You should know that how to keep the money with you, not how to only make it. So that's all good. But when we say what is the difference between the assets and liability, when we talk about money, it's not the two things. Or we know in the accounting, the assets and liabilities comes. So Rajkumar,
Yeah, sir. The author says here the basic difference of asset and liabilities. No other books can explain in such a better way. The money which comes to your packet, it is asset. The
Yeah.
money goes out from your packet, it is called liabilities. In my personal experience, before reading the book, I felt that whatever I thought it is my asset, I acquired more of liabilities, which I consider those things as my asset. This is the basic difference the author he points out. Definitely, I am suggesting, trust me, those who are need to become a financial literacy, kindly read this book. It definitely makes you your life with a greater impact because it clearly explains with the cash flow pattern and all the this flow diagram, everything. Yes, sir.
so what Rajkumar is trying to cover that we all know that accounting is possibly the most confusing, boring subject in the world. But if you want to be rich long term, you could be the this accounting is the most important chapter we should know. So when we say assets and liabilities, basically assets and liabilities we can tell in the big accounting group. There is definition, a big definition. Definitions are there, but in the simple terms, what Robert Kiyosaki has explained is basically that an asset puts money in my pocket and a liability takes money out of my pocket. This will be very clear if you. I want to show you one diagram. With that diagram, you'll be able to understand what I want to say. So this is very nicely explained by the author regarding the. One minute. I just want to bring the presentation. So I'll show you. So I think you are able to see my screen now. So Rajkumar, are you able to see my screen?
Yes, sir.
Yeah, yeah.
Yeah.
Visible.
So basically, if you see here, the asset in the left hand side we are shown and the liabilities. Here two statements are shown: income statement and balance sheet. We all know in accounting there are two kind of statements which tells about the financial position of the company or the person. So in income statement, basically it's called the profit loss statement also. There's a two part. One is income, second is the expenses. In the below, if you see that the balance sheet, balance sheet basically balances the assets and liabilities. So what is the asset? Whatever assets are there, that will give you the income. So the assets gives the income and liabilities take out the income, or we say that is basically adding to the expenses. So that's all difference what I can say you for the assets and liabilities. I think Saurabh, you want to add something?
No, you have shown a nice diagram, Sanjay. It's very well explanatory, isn't it? Asset,
Yes,
which is giving some income to me, and liability is something which is I'm making some expenditure. That is my liability, which is removing expenses from my pocket, isn't it? And you
yes.
have shown it in a very lively diagram. Wonderful.
Okay, so Praveen, I think you want to add something?
uh, Whatever the cash flow diagram we see, it is very much evident that the quadrant what we have to work on is the asset. We need to build up our assets. So we need to build up our assets in such a way that it will take care of all the expenses. So if the expenses are more than your income, then it's not a balance sheet. It is called. It's not called as a balance sheet. The balance sheet should have an equal of asset and liability, and the asset should start growing. So it's like the money should work on its own. The other says. Once you put a cash in money in asset column, it should start growing on its own. It should work on its own. It's like we plant a tree. We need to do watering for certain time, and later on we don't need to do anything. The plant start growing and it gives a shade to us. So in such a way, we need to take care of the assets. We should not take out the money from the assets. So as you said, sir, that we need to identify the exact difference between the asset and the liability. Yes.
Yeah. Okay. So what actually we have learned in our childhood, I remember in my childhood, we were talking only the two profession. Either the person, if they are reading maths, he'll be engineer, and if he's reading biology, he'll be doctor. So we in our childhood, I was knowing only the two professions, either doctor or engineers. Now we know so many professions are there. So, but they made us that when you become engineer, will be like a rich kind of thing. But in practicality, that is not the case. We all understand that. Okay. So that's let us move to the second, the next topic is that how the quest for a financial dream turns into a financial nightmare. Saurabh?
See, basically, we have defined asset and liability, isn't it? But
Yes,
we should know the difference between the asset and liability. Yes, once
correct,
that difference is clear, then because many times it happens that we think we are buying an asset, but it is a liability for us.
correct,
Many of my expenditure which I was thinking, a good TV or a good refrigerator for my family, it is an asset, I can preserve the food there, everything. But overall, if you see, if I'm taking it on an EMI, I am paying interest on that. It is not adding to my income, but it is taking away something in my regular income. Those, no, these financial schemes and all those people, they will give a call to you and tell you you will get a top up loan on your home loan and everything. But what is happening? They are introducing a loan burden, and continuously I am paying additional onto that. Rather than being an asset, it becomes a liability. Same way, which I thought, if I suppose I take a house, I am paying EMI for 30 years. 30, the moment my income is increasing, my EMI balance is also increasing,
true,
and I keep on expending more. Is So rather than being an asset, some of these investments are in turn liability. We need to know what is there and then spend in a reasonable manner within my reach, so that I make keep my money and help it to put in places like growing, like Praveen told regarding assets, like planting a tree. I plant a mango tree, it starts giving fruit after 3 or 4 years, and lifelong it gives, it's a fruit bearing. That difference should be clear to us in our financial statements.
correct.
What do you
Rajkumar,
say?
Rajkumar, you want to add something?
Yeah, sir. I like to add like life is like a always we talk about the rat race in this chapter, but I like to share it is life is like a cat and rat race. So like rich will like a rat, whereas the middle class and poor people are like a cat. It is a difference between, as Saurav sir said, it is the difference between what we are living for. It is for the purpose or for the need. Always the cat will win the race. Okay, sorry, the rat will win the race because the cat is running only for its food. It is only for the purpose. Whereas the always we should work for the more than need. We should work for the purpose. That's why it rat win always the race.
Correct. If I take my example, see, when I joined my company where I'm working right now, I think, I expectedly, Sora also will agree to me because we joined together that company, and I think we were getting hardly 12,000 rupees in hand. That was way back in 2003, and we were happy with that income, 12,000 rather. Okay, now today we are getting 1 lakh plus, but still the things is like same. We have, as we are, our income is increasing, our expenses also increasing. So it's not only about my expenses. Basically, my family increases. First, I got married, then my son. Now we have one flat, we have car, we have all the things. So what happened? We cannot say that as income increases, your expenses reduce. No, as income increases, the income also increases. Even you go in the higher tax bracket, when we were 12,000, it's like 10% also not coming. Now we are always in the 30 plus percentage in income tax we have to pay. So when we say we are always getting to what again Rajkumar was adding here, that we get trapped into the rat race. Rat race basically we go for the income, and before we get the salary at the end of the month, we already have planned where this month income will go. So we already had planned in the beginning itself before getting the money where the money will go, and we are always get trapped in the rat race, and we are not able to build our assets. So that's the things is there. But here I want to show one more slide here, which will help you to understand basically what is rat race. I mean to say, okay, just a minute. My screen is visible now, Saurabh? Yeah.
Not yet visible, huh? Now it is getting
Okay, good.
visible
Sorry.
coming.
So what I was telling, some technical issue. Okay. So here if you see the all salaried people, what happens actually? We work for others. Okay. So when we get the income, we work for the company where we are employed. Okay. That's the salary what we say. Then we do the expenses. Expenses mainly go maybe like majority part goes for the taxes. The taxes basically work for the government. And if you see, if you have a house or if you have some car on loan and all if you taken, then your liabilities comes and then you work for the bank. So this is what the general all salaried people act on that. Okay. So this is basically showing on that we are on the rat race. Okay. So anything you want to add, Praveen?
Happened with me also. Initially, after getting married, we moved to an apartment, and then after moving the apartment, we are paying much more rent than what we should pay. And then we dreamt of a house, and then we purchased the house, and then we took a lot of loans, and then our income is increasing, and the expenses are also increasing accordingly. So that's what
Correct.
we should understand. We should come out of this rat race. Uh, we need to work on our assets to come out of the rat race where the assets will take care of the expenses column.
Correct. So now that is one part we understood the rat race. Now let us understand why the rich get richer, why the middle class struggle. That's the genuine problem we all face. Okay. So what is the solution for that, or why it happens? Why the rich get richer? Saurabh.
See, the rich work on their asset column. No, they make an income where they by buying assets, they create assets. Actually, first they differentiate and they create asset. Then the income from that asset is like a residual income or an rented income. Suppose you have a house for your own, it is a liability or an asset that we can discuss. But if you have a asset which you have rented, you get a rental income. You have an organization where something is developed, so suppose a company owner, then he gives salary, but the profit is his, which he can reinvest in again. This rich form into this cycle where they create asset, the income from the asset is more than their expenditure, and whatever the additional amount is with them, they reinvest in buying another asset or creating higher more assets, and they keep their expenses under control at the same time, having a clarity on that. So their liability column comes down and their asset column keeps on increasing, and along with that asset which gives this a continuous income, it becomes a success cycle rather than a vicious cycle of loss into which we all middle class people under credit and all, uh, we flash our credit card on small things, and we are continuously in debt. But rich, rather than doing that, reinvest that as money from the asset, increase their income, and keep their expenditure or the liability much low. You'll see all the rich people, they have so many techniques to find loophole in the taxable systems, and we salaried people exactly it will be deducted in the month and from our salary, and in the form 16 we will come to know even that this much is deducted here, and we are struggling to save some 5,000 here, 10,000 there, isn't it? What do you say, Richards?
Yeah, sir. Just I want to add, along with you, whatever you said. Normally, we save after our spending. Instead, we have to spend what is after saving. That gives the greater wealth in the point of view. Again, I want to add, more than the money we earn and the money we keep, it is a spending habit also that matters a lot. So for that, as a when we read about the state budget and central budget, we should also have a family budget. With that, we can guide the money where it should go. Instead, we will surprise the end of the month where all my money has gone. So that way, we should have a good spending habit, which reduces the liabilities, which increases the asset. Again, the asset can work for your income. Again, it keep work on so that we can move toward the wealthier side by reducing the liability and increasing our assets.
Correct. So what basically Rajkumar and Saurabh has told here, I would like to show you with the pictorial. Let us understand what are the income statement. I think my screen is visible now.
Yeah.
Yeah.
Okay, so if you see here, I have put the three but people, poor, middle class, and rich. So in poor, what happens? There is a job. From the job, they get the income, okay, and that income get spent in expenses. That's it, nothing else. So what happened? He get the some job, like daily basis, like so many daily wages and all. They get the income daily basis or maybe monthly or whatever be, and their all money goes in spending. They don't save anything. But if you go for the middle class, how it works? Salary come, that is income. But before salary, that it go for the liabilities. That is liability, nothing but your car loan or your house loan, your credit card, all those things you have to pay first. Then you do the other expenses, and then money goes out. So that's the middle class. But in the rich what happens? The income comes from the assets. So if you see next, why the rich get richer? Basically, idea is that for the middle class, we do first spending on the liabilities and then expenses. But in rich what they do, basically the assets give the income and some portion of income again he build the assets. So that cycle keep on going. If you see here, income to assets, assets to income, and thereby reducing the expenses and liabilities. So with that, it is very clear. You can understand here also that the poor people, their statement will be liabilities will be more, assets will be very less, and each rich assets will be more and liabilities will be less. So that all shows what actually we are getting from this all financial statement. I hope it makes very clear that the funda behind why the people are getting richer and why. Now again, let me bring a very simple statement saying that what is asset? Now when we say asset, many of people have got very much good myth, I'll say, or I think there's a dilemma. They think that real estate, when we put the purchasing of house or owning a house is an asset. Is it so? What Rasma, what do you say?
Yeah,
Yeah,
it can be a beautiful
it's
debate, in fact.
when we connect emotionally, just I like to say, normally when we see the houses with the four walls, it's but when we connect the house means we feel with a lot of emotion. We decorate with the house with the two eyes and with the soul. When we connect the emotion with your finance, always it tends to bring down our financial literacy. Definitely, the house is an liability, whereas I also thought it is an asset. I too have a home in my native where I didn't rent it out. Just I am keeping for my own purpose. But after reading this book, I feel whichever the as per the income statement and the cash flow, which money comes to your packet only, it is an asset. Which is you are spending for the maintenance and other activities, it is a liability. The house is an a liability, but people have a things to debate on this issue. But when you technically when you speak, it is a liability.
I think Praveen wants to add something.
Yes, sir. Yeah, everybody dreams we need to have a big house, and we are very much emotionally connected. But that dream house needs to be, we need to plan accordingly that the cash flow what we are getting should be paid by the dream house. We should not take the home loans and all. So that is what, even you should have the dream, you should have the emotion attached to it, but you should see how it will be fulfilled.
Correct. Saurabh?
See, a builder builds an apartment, it is an investment for him. He
Yes,
puts, he resells, he makes money out of it. I
correct.
bought my house, it is not an investment, it is a liability. But yes, it has got an emotional factor, as Praveen and Rajkumar both have told. I also have purchased. It's not that I'm denying it. No, that's why I told it can be a big real estate. If we go in a real sense, no, somebody is looking at an asset which is not used, a beautiful bungalow or something. You go and then you somebody is ready to quote it. It has been so many happens that many millionaires, huge buildings, people will be have purchased it, but they would resell it off at half the price. A person who looks for such assets and buys it at the half and immediately resells it with making a profit. No, suppose you get a good house, no, when somebody moves abroad or something, he would like to sell an asset and go, he will give it at a very cheaper price. We all would have seen such occasions, or a friend or someone who had purchased such a property. No,
Correct.
the person who has purchased at that occasion, he is financially literate. The
I'll
person who has sold is emotionally. Yeah, tell me, Sanjay, continue, Sanjay.
see here what happens basically. I remember that when I purchased my flat, actually all of us have purchased the flat. We are definitely we were fool, I'll say, but okay, it's not that we are sentimental fool rather. What all people are covering. See, we would have purchased flat maybe in 40 lakhs. Example, I'm telling. But when you put, we would have taken the loan. So I was calculating the loan amount or the interest what we are going to pay. This house is not 40 lakhs, but rather it cost me double, more than double rather. It cost me 90 lakhs. If you add all your EMI, multiply with the months, you will understand that it's not 40 lakhs, rather it is more. So that 50 lakhs additional money, where it has gone. So I was thinking when see the people we can say when I can say the house, whatever house you are purchasing or the real estate you are purchasing, it could be an asset only when if you are putting from your own pocket or if you are taking loan, then your EMI should be lesser than the money or the income you are gaining from that particular real estate. Real estate means it could be a house, it could be your land, whatever. But just merely purchasing the land and keeping it without any use is not an asset, rather it's liability. Because for that we need to pay property tax always. Not only property tax, you have to take care, you have to maintain. Many things are there that accrue the cost for your this one. So it's not liability. So in this situation, I was telling you the flat situation if we talk. So in the flat also what happened, the 50 lakhs rupees I was telling you, where that 50 lakh rupees extra, it has gone. So if you see the 50 lakhs extra money, it has gone to the bank. So basically we are making bank richer. So if you see this particular thing, what happens in home loan? You get the income from your job, you have to pay the liabilities, you have to mortgage payment and all you have to do. It goes for bank as an assets. Your loan is an asset to the bank, not for you. The loan, what we taken is liability for us, but is an asset for bank. And when it is asset for bank, the bank gets income from that. So that the cycle goes for the home loan and all anything we see. So I think it's now clear why we are telling home is an asset definitely, but not for us, for the bank, and lavish liability for us. Okay, so that's the things I want to cover. I think anybody wants to add anything, please let me know.
Yeah, sir. It's all about what we do. Such activities is only because of the financial ignorance. The number one problem in today's generation and economy is the lack of financial literacy. That's what it's like. I can say many people we stuck because we try to push the door where it is written full. So we should be financially literacy so that we can do what we really need to do. So that is the thing which I want to add. Again, it's like whenever save money and they spend. Again, similarly, the poor and middle class people they spend and they try to saving. This is a rat race which will happen. That's what the rich becoming always richer. The poor and middle class people still struggle to catch up the thing. So, but only thing is through our step by step approach of learning financial things. Overnight, we cannot construct the palace. So it takes little small steps, which through small financial literacy by reading a good books, meeting with the friends, and talking about the same financial aspect, one can become a financial literacy. Once you become a financial literacy, you can reduce your liability, increase your asset, and we can move our life towards the wealth, which I want to add it, sir. Thank you.
So with this, we are coming to end of the session. Okay, and we all are part of Peak Impact Mentorship. The Peak Impact Mentorship basically is an organization who is helping us to become like for our growth and to empower people. So if you want also to become a member of Peak Impact Mentorship, you can fill the nomination form in the our Facebook profile or YouTube wherever is there, or you can contact us. You can put your comment, and we'll contact you how you can become PIM. It's a place for all-round growth and development. Okay, with this, we are going to sign off now. I thank you. Thanks a lot to all my panel friends, Rajkumar, Saurav, and Praveen, and thank all of you for watching us. And we'll come back again with a good one more topic which will help you. I hope we have added value to your life, and thank you very much.
Thank you, sir.
Thank you.